Okay, so just a quick update on the situation that we currently have on gold. Now, if you remember in the previous analysis that I made on gold, which by the way, I will link in description so you can go and check it out again. What did we say? We said after the move to the downside, we want to see a retracement to retest this trend line. Why? Because this is a very important counter trend line because overall the trend is to the downside. And not only that, this is also a very important structure level. In fact, it was acting as strong resistance here, support, fake breakout, break to the downside, and here we have a confluence of resistance. So the resistance given by the counter trend line and the resistance given by this horizontal structure level. And after the retest of the zone, what did I say? I said if the market will go for a retest of the zone, we can definitely be looking for a nice shorting opportunity. And in fact, we are currently inside of a very nice high risk to reward trade to the downside on gold with students. Now, what is next? Okay, if you didn't take the trade or if you are in the trade, what is next? Where you can be looking for another opportunity and where is the overall downside target? Now, if you remember in the previous analysis as well, what did we say from a weekly perspective? We said if the market has created this candle here, this one here with a long wick, you expect the next candle to fill in this wick. I spoke about this many times and also made a YouTube video about this candle. The next candle is supposed to fill in the wick. It's a pattern that happens over and over and over again because what the wick actually means is that on lower time frames you will have an impulse and the correction which will actually create the wick, so that overall you expect the continuation to the downside and the next candle on the higher time frame, so in this case the weekly, to fill in the wick. Now when it comes to the target to the downside, where do we want to be taking our profits? Now in all of this move to the upside, there is one candle which is not related to the move to the upside, which is this red candle here. And we definitely want to see the market go and grab some liquidity at this zone before the continuation to the upside. Now, what we also said, and what we also have to check again, because we have new data that has come out, we have to check what big banks and institutions are currently doing on gold. So let's go and get our COT data, so the commitment of traders, what the biggest speculators in the market are currently doing, how are they positioned. So let's go and get our data for gold. And what we can see that with the last report, hedge funds have closed another 15.9K long positions. So that is why we definitely wanted to see the move to the downside, because hedge funds have started to take their profits on the very massive long positions that they had. We were sitting here at 295K long positions from an institutional perspective on gold, and we definitely wanted to see some profit taking. And in fact, they have closed 15K longs positions and have also started to add more shorts. They were already adding shorts, and that is why we already wanted to see gold make a move to the downside. And we are currently sitting at 219K net positions, which is the lowest level of net positions that we had in a while if you look in the past. So definitely we can expect for a gold more continuation to the downside to hit our overall downside target. But as usual, guys, trading is reactive, not predictive, and that is the reason for which, even if we want to see more continuation to the downside, we are already risk-free on the position, meaning that our stop loss is already past the entry price to protect our capital. So the worst thing, if the market will shoot back up, we will get out of the trade break even. Now, if you're not already in the move, okay, if you are in the move, what I suggest, go risk-free and hold until the downside target. If you're not in the move, where is the next opportunity for gold? Now, at the moment, you have to realize that gold has created new structure when it created the retracement, which is here, right? Gold has created a new structure. This level here was support here, again support here, preceding the retracement. And all this support is now term resistance at this level. Now, if the market will, for example, go a little bit lower and then start a nice retracement, then we will have this previous support here that will be turned resistance at this area. We will have the confluence of the Fibonacci taken from the high to the low of the impulse, possibly a 50% or 0.618 Fibonacci retracement, all lining up inside of this clustered zone of resistance. And this is where you will have an opportunity to be looking for a shorting opportunity on gold. And we will be looking as well with students if the market will create this impulse and retracement inside of this area for another potential opportunity to the downside, so to compound our trade to the downside. So after the impulse and correction, we will be monitoring price action with students from a 4-hour perspective, because always remember, monthly, weekly, and daily are for direction. The 4-hour is the best time frame for entry because it helps you enter the market with the best probabilities and best risk to reward. So we will be monitoring price action from a 4-hour perspective instead of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.